Hey guys, welcome back to my channel. We are in my newest series all about how to set up your small fashion business. And in this section, section 2, we're going to be talking about what to expect when filing your small business taxes. And here with me, I have a guest, my husband. He is a tax manager of over 10 years. He was actually my tutor when I was getting my accounting degree. Yes, that's right. I also have an accounting degree in addition to my apparel design degree. And he has a master's of taxation from one of the top programs in the United States. So between the two of us, we got you covered.
It's such a pleasure being here with you and your audience again. Happy to provide whatever insight I can.
Yeah. Well, we are happy to have you, and I'm very lucky to have you as a close member of my family so that I can talk.
I have gotten a lot of questions.
Yes. I mean, but it's nice because then I can pass it on to them. So you guys really, come on. All right, and a quick disclaimer on the information that we're going to be giving you. This should not be construed as professional advice. You should always be consulting with a professional, and these are just sort of some guidelines and tips that we have for you guys. So each situation is going to be really unique, and that's why a professional is super important. So definitely always talk to a professional and don't just use what you learn online.
We are only covering the basics.
Yes. In this section, we're basically just going to be talking about kind of like some different things that you can expect, some tips, and just kind of how filing your small business taxes is different from filing your individual taxes. So let's get into this. The first thing I want to talk about is keeping track of your finances, because that is like by far probably the number one thing that you'll be dealing with in your small business, especially as you first start it, and what's most important.
And so, yeah, a lot of degrees. Probably what's gonna make or break, well, not your business, but make or break how much of a pain doing your taxes, or even having someone else do your taxes, how much of a pain it is for them.
Totally.
Clean financials are like, words can't even describe how happy it makes me when I get a client's work and it all makes sense. They are clean and organized. No accountant likes the client that has the box of receipts.
Yeah. And not only does it make like your job harder, it actually like is not good for like their businesses or my business or whatever, because you don't have a good understanding
an accurate picture
right,
of what
and
your
things
business
can get
is
missed
doing.
And like, it can just, be a total headache. So, speaking from personal experience, I try to always like update my financials every single month at the end of the month. I think it was last year that I skipped like 4 months, and I was like, it'll be fine. Like, I have a separate bank account and stuff, so it does make it a lot easier, but it was not fine. It was really hard. It took so much time. Like, it was just a nightmare. So please don't do what I did and just keep your financials updated.
Yeah, I definitely would say make the first week of every month you're gonna do the last month.
Yeah, that's what
make
I do.
it a habit. Or even if, I think it also depends on how much the volume of transactions and stuff that you have. Okay, if you're only doing 10 transactions a month, well, maybe you can do it every quarter. That's going to be super simple. But if you're doing a lot of business, a lot of volume, definitely staying on top of it. The more often, the better. Because it's going to be a nightmare for you and anyone else trying to help you.
Right. Totally. So I don't want you guys to get overwhelmed by keeping track of your finances. Like, you don't need to I don't want to say you don't need to make a balance sheet, but as a small business, and for most of you, I'm assuming that like your business is going to be pretty simple from the beginning. So you don't have to like worry about having all of these like super formal financial statements. You really just need to focus on tracking your income and your expenses.
And that's what I see a lot with new clients that have potentially gone from that startup phase to, okay, now they're making some money. We need to get our ducks in a row.
Yeah.
We need to get this stuff actually how it should be. And that's when I can come in. In the beginning stages of your business, you just want your income and expenses to be correct. And as time goes on, we have new clients come in They bring in their information. Okay, that's when we can do a lot of the cleanup work and get you right on track. But it's not as important until you're making more money, and then the risk of you doing something wrong becomes greater to you financially. But yeah, all these things can go back and corrected going forward. So do your best, but it doesn't need to be perfect.
Yeah, it doesn't need to be like overwhelming at first, because it's what I was talking about in section 1. Like, don't be paralyzed by the fear of being perfect. Like, just do it, and like you'll learn as you go and get an accountant. So for me, I keep all of my financials on a just simple Excel spreadsheet. But if you are working with like bigger volume sales or lots of transactions, you might want to look into actually using a software to help you manage all of your transactions. And so that's something like QuickBooks. And I know from other like entrepreneurs and small businesses that they actually have a self-employed option now. And I think what you do is you hook it up to your bank account, and it just like siphons everything onto. And I'm sure you have a ton of clients who use QuickBooks or had used QuickBooks before.
Yeah, I mean, we have kind of clients across the gamut. I mean, even some clients making significant amount of money that just track stuff on a spreadsheet, but they don't have huge volume. I mean, I'd say a spreadsheet is good enough if you're dealing with hundreds of transactions a year. I mean, once you kind of get into the range of thousands, well, then you probably want a bookkeeper. You should be using QuickBooks.
And I think for a lot of people that are probably watching this, that's like something to keep in mind for the future. Yeah, for sure. So in my worksheet that I used for tracking my income and expenses, I won't list everything out on this video. You guys can go read the full blog post, which I'll have linked down below. But on my sheets, I basically just have like the date, the type of transaction, the category it is. Usually I'll put like the platform it comes from, since I have income that's coming from different places. And then I always like to, since I do a lot of services, I like to split out how much I'm actually getting, whether it's from tips or like the actual amount that I've charged them. And then I always include the actual processing fee. So if you are charging your clients through like PayPal, for example, or even Stripe, you can actually go into the transaction and you can see how much the payment program that you're using is charging you per transaction. So you want to make sure that you're actually reporting the real amount that's coming to you.
Right. Reflecting the correct amount, because you don't want to be over reporting income or even under reporting income. So you should definitely, you sell something through PayPal for $100. Okay, that $100 of income is going to be income, but any processing fee and stuff like that, you'll want to make sure to take the appropriate expense for that. Right. So you're capturing everything appropriately.
Yeah. So you can set up your tracking document in whatever way you really want to, and like whichever way works best for your unique business. As someone who sells both products and services, mine's obviously going to be a little bit different than what your guys' probably is going to look like. But I mean, you can be pretty flexible. It's really just about recording the information enough so that you know what each transaction is. If you have a receipt that's related to it, you want to record that as well.
Yeah, and again, it's really about keeping things organized. So 1, you can prepare your taxes. 2, you can keep a good oversight of your business and how you're performing. And then, worst case scenario, it's also about being organized enough in case an audit ever occurs. I mean, that's where messes can really screw you up. If you can't go back, well, I don't know where these numbers came from.
Yeah, the government doesn't like that.
No, and it'll be not a pleasant experience for you.
Yeah, so just staying organized is really the big thing. That brings us into categorizing your expenses. And that was something that I struggled with when I first started out, because I wasn't really like thinking about it at the time, even though I know when you put your expenses onto like your tax form, you want them to be in certain categories, but I had to go back and categorize everything, which sucked. So you definitely want those categories.
And you want to be doing that as you're going, as you update your financials. And, you know, one place I would go to look in addition to her materials is if you pull up just like a form, the Schedule C form of the 1040, it'll show you all of these. It has, you know, maybe 20 plus different categories already broken out for you. They kind of these most general categories that people put expenses into. So that's a good guideline for you to look at the actual Schedule C form and base your categories off of those specific line items referenced there, because that's exactly where you're going to report it on your tax return anyways. And then, you know, there's other expenses, and I think the key here is just really kind of doing your best to keep things organized. You know, it doesn't need to be to the most minute detail. It doesn't also, you don't want to be too broad either. There's a fine balance between giving enough detail and then not enough. You know, and that's also another thing that plays into IRS scrutiny. You know, if I categorize all of my expenses into one category and okay, there's no other categories, like, okay, business expenses and a huge number. The IRS is gonna look at that and be like, well, I kind of want to find out what's in that huge number. So then, you know, breaking that out into like smaller chunks, you know, then they can see all these different categories, and you know, if they're smaller amounts, they're going to be less inclined to question you.
Yeah, and I think it's important to say, like, the government isn't out looking at small businesses trying to like scrutinize you.
No,
they are paying attention to stuff like that because it becomes like that's where people hide things and are breaking the law. So if you're not breaking the law, that's good, but it's also important to follow these guidelines so that you're not looking like you're trying to hide something.
Yeah, you know, it's all about in my business or keeping the red flags. You don't want to raise those red flags,
right?
Because, you know, I just don't even want to deal with them.
Yeah.
So
totally.
like I'll do the work ahead to prevent those future problems.
So don't be afraid of the IRS, but be prepared. Okay, so some of the common categories you can use are subscriptions, supplies, business license, and fees. And those are like the business licenses that we talked about in section 1. So those fees that you use to set up your business, you can expense those. And then like equipment, but obviously, you know, some of that needs to be capitalized and depreciated. Advertising and marketing, independent contractors, and there's a ton more. So we just kind of wanted to give you guys some tips for maybe trying to keep things organized. I know we kind of talked about a little bit of these, but I think that having like an invoicing system was a big one for me because I was providing services or am still providing services. So including that invoice number with each transaction was how I was able to keep everything organized, especially because as a service provider, you're not getting all of your income at one time. So your client isn't paying you the full amount all at one time. So having that invoice number for each payment actually makes it a lot easier to keep it organized. Another one, which I kind of mentioned earlier, is numbering all of your receipts. So whether those are online, I usually print mine out if I get an online receipt. I also have a folder inside, like on my computer, a file on my computer where I save all of my receipts. And when you have paper receipts, like if you went to a store, for example, you want to number those. That's one way to keep track of it, or you could even scan them into your computer if you have a paper receipt. But just kind of having a way of keeping that receipt number attached to what's on your financial statements.
Yeah, and again, the important reason for keeping that underlying data is in case of audit and other circumstances, you know, that spreadsheet isn't gonna be enough. The IRS specifically, that doesn't care about your nice spreadsheet. They don't care about your financial statements. They want to see actual money going in or going out.
Yeah, they want the proof.
So I mean, that's again the receipts or bank statements, and then to justify, okay, this was a business expense. So even the bank statement might not give enough detail as to what exactly you purchased that is a business expense. So you know, so having your financials, you know, it is important to then keep the underlying records organized and easily reference between your financial statements or spreadsheet and that all those receipts and stuff that you have.
Yeah. I mean, in reality, you probably will never like use them, but that's not the point. The point is to have the evidence to back it up in case of an audit, for example.
Yeah. And I mean, we do deal with audits, consistently, because that's my job. But for the most part, I mean, most people aren't ever going to see this or need this, but
it's a safeguard.
It's so much easier to deal with that situation when you have everything versus I've dealt with audit cases that it's a nightmare, and then we charge them a ridiculous amount of money because they aren't organized and they don't even have a clue. And I mean, even though we charge them a lot of money, it doesn't make me happy to do it. The work.
Totally. And then I think just the last big tip is what I was talking about earlier is like, don't wait until the end of the year to do like your financials or keep track of where your money is coming from. Even if you have a separate bank account, which we definitely recommend that you should, for your business, even if you do, like, just keep track of it during the year because it's so much easier and you won't be spending a whole entire week 24 hours a day trying to go through bank statements and purchases. And I mean, I'm sure you guys have seen that, like, if you already own your business or are working on owning your business, sometimes you have to end up using your personal card for something, or like you buy something on Amazon and you accidentally buy it through your personal account instead of your business account. So like that's where things start to fall through the cracks, and that's why you want to keep everything updated during the month. All right, my favorite, estimated quarterly payments. And we actually got, one of our audience questions was about this, and we'll be answering all of that at the very end. But I think that was a good question, but yeah, that was definitely something that we were going to talk about. Yeah. Anyways, so basically as a small business, if you've worked in a 9-to-5, which I assume the majority of you have your employer taking out part of your paycheck for taxes. And when you're a small business, you don't have someone doing that for you. So that's what estimated quarterly payments are essentially making up for.
Yeah, again, it's the government doesn't trust anybody to hold on to their money that they make during the year to pay them by 4/15 of the following year. The government, probably rightfully so, doesn't trust us to hold on to that money. So, that's the idea, again, about withholding from wages. Every paycheck, the government is taking their cut. And this estimated quarterly taxes is the mechanism that the government uses to periodically collect tax from business owners or even high net worth individuals that make a lot of their money from investments and other stuff like that. They still need to make these quarterly estimated tax payments to avoid penalties and interest. And that's really the whole purpose of making these payments, is to avoid penalties and interest. It's not going to set you back horribly paying the penalties and interest, but it is an extra amount that you probably don't want to have to pay if you can avoid it.
So essentially what these quarterly estimated payments are is that you are paying a smaller amount 4 times a year versus one big amount at the end of the year. And that makes it so that you are able to make those payments, especially as a small business, when you may not, especially your first year, you may not have a good idea of how much you're going to make. Mm-hmm. So if you're making those payments either based off of a trajectory that you've made for yourself, or based off of what you made those first 4 months or whatever, 3 months.
So as we were just mentioning, there are 4 payments, 4 quarterly estimates. This due 4/15, 6/15, 9/15, and then 1/15 of the following year. So I think then the question is, okay, well, how much do I pay each quarter, and how do I know what my full year's income is going to be? So for example, calculating your first quarter, and again, this is why it's so important to keep your financials up to date so you can actually even project and calculate this accordingly. But for first quarter, I'd look at how much my net income to date, and I would annualize that or take into account, your business best. So do you expect it to be higher for the rest of the year, or is that a pretty good average, you think, for the rest of the year, or is it going to be lower? And these extenuating circumstances,
Yeah,
okay,
like when your
maybe
sales will be higher.
a new
and
store picked up your product.
Yeah,
Right. So you'll have an idea. But the general thing is look at where you're at, and then you're going to project the full year. And so theoretically, each quarter you should be paying 1/4 of that total income or that total tax on that net income for the year. So if I project, and each estimate can kind of, in this what I do for my clients, each estimate is then readjusted and refined as you get more data in throughout the year. You can continually refine.
So they don't have to be, it doesn't have to be the same payment every time. Like if halfway through the year then you made like $100,000 or something, then you would obviously need to adjust
a bigger payment. Or business that got
you're not like
unexpectedly slow, you're gonna, I'm not gonna pay that same amount next time because I think I'll be overpaid from that last payment. So it is a kind of constant reassessing of your status, where you're at, where your business is at, how much tax you've paid in. It, to be honest, can get kind of complicated.
Oh yeah, for sure.
But do your best and pay what you can. So the last important piece on all this is also there is a extra tax form, an extra mechanism in the tax law where they can account for seasonality in your product or your sales, or you had a just huge unexpected, so all year has been super slow and you've been trying to make payments based on that information, and then the last month of the year you blow it out of the water, make tons of money just in that last quarter. There is a mechanism to show to the government, I made all this money at the end, so I didn't know those other payments were underpaid, but I didn't know that about this huge payment coming at the end of the year. So that'll help also limit the amount of penalties and interest you pay.
Yeah, I didn't know that. That's actually really helpful to know. Okay, so let's get into what you can expect when you are filing your business taxes and how it's just a little bit different than when you're just filing your own individual return. So depending on what your entity type is, and we went over those 4 entity types in section 1, so we're not going to go back through that. So what you're going to do is you are going to go on to either your tax software that you're using, or if you're just doing it by hand, you'll be choosing the entity type that your business is. So like for me, I'm an LLC, but I'm taxed as a sole proprietorship. So I would go and get that Schedule C form and fill that out with the expenses that we've been tracking this whole time, and filling that out with the income that I have made over the year. You categorize your expenses, and then you basically just fill out your form.
Yeah, and so for a sole proprietorship, that Schedule C would just be included with your Form 1040, and you're good to go. So we just talked about sole proprietorships, partner, and I think I alluded to this in the other video as well. Partnership, if you're classified as a partnership, you're going to file a Form 1065. It's a whole separate tax return. You'll get K-1s that then you'll need to report on your 1040. Same with an S Corp. That's an 1120S. A whole separate tax return. You're going to get K-1s that are going to then need to be reported on your 1040. And then lastly, again, a C Corp is a whole separate tax return, an 1120. And so, but that one doesn't flow through to your personal return, so there's no K-1 for that. But those other 3 entity types do require a whole separate tax return, and then also provide some other information that may or may not need to be included on your Form 1040, your individual tax return as well. And then also want to clarify one comment about an S Corp. If you want to be an S Corp, there is a specific election, a form, it's Form 2553, that you have to complete and file to be classified as an S Corp. It's not like an automatic like a partnership. There isn't some extra form you need to do to say that I'm a partnership. You just start filing a tax return. Same with a sole proprietorship. You don't need to file anything necessarily. You just start filing the Schedule C. And that's how they know that you started it. But an S Corp does need a separate election and a separate form, and there's specific timing rules. Again, a lot of nuance into all this. So you should contact a professional if you have questions.
I was gonna say, if you're not familiar with how all of this works, like I'm in a very lucky situation that I have like this brainy person that can help me with mine. If you're not familiar with how tax works, you should definitely be working with an accountant, with a professional, because this is an area that you really want to invest in for your business to make sure this information is right, because if it's not right, like it can put you out of business. Like that, this is like number one, like I would get an accountant before I even got a website. Like 100%, it will pay off in the long run, even though it seems like a big cost up front. So we just kind of wanted to go over, since we're not gonna like go into how to file your tax return, because that would be crazy, and that's why you should have an accountant working with you.
We're not going that far. All of that
but we did want to give you sort of like some of the nuances or things to look out for. And one of those big things is everything that you put on your expenses doesn't, like, just because you put it as an expense does not mean it is able to be expensed, or that the government sees it as an expense. And so there are some like tricky areas where you might think something should be expensed. So we kind of wanted to go over those common like misconceptions.
Yeah, and on that point, I have tons of business clients. They like to send in stuff, and I need to go through their profit and loss with the fine comb and take out all of their personal stuff.
Yes.
Or based on other tax law that isn't deductible.
Yeah. Which is another good reason to have an accountant, is because they are going through, and that's what you're paying them for, is to make sure that everything you did put on your expenses has like the appropriate like proof that it is actually an expense, or is taken off if it's not, because that's where you're going to start getting into trouble and having to pay big penalties. So, okay, some of the like biggest pitfalls or common pitfalls that you have seen and that we learned in school. Meals and entertainment is one. There is stuff that can be deducted, obviously.
Yes.
But meals and entertainment is
at an incredibly, again, high level.
Yeah.
Generally speaking, some meals are still deductible, but those are limited to 50%. You can only take half of the meal expense as an actual deduction. And a lot of software accounts for this, so you'll put in the total, and it'll reduce it by half. But you should be aware that that is happening. And then on top of that, though, with the recent tax law changes that happened a couple of years ago, they changed a lot of the rules around meals and entertainment. So now entertainment expenses, pretty much no matter what, are not going to be deductible.
And I mean, that's another good point, is that another reason why you would pay an accountant is the tax law changes a lot. Every year there's changes.
Almost every year. I mean, there are at least certain little changes maybe that do change kind of every year, certain number thresholds. But yeah, I mean, this last one was a big change. I mean, there usually aren't huge changes, but yeah, I mean, that is a true statement that almost every year there are.
And that's part of your job as an accountant is to
keep up to date.
Is to keep up to date. And you as a business owner, like, you're already wearing enough hats.
Yeah.
Like, you don't need to be keeping up with tax law. That shouldn't be another thing that you're focusing on. Okay, so another one is clothing, and I've actually heard this a lot from small business owners, like on Instagram and stuff, and we're not talking about clothing like your inventory if you're a fashion business. We're not talking about clothing
what
inventory.
You're selling.
Yeah. That obviously, you can expense your inventory, but we're talking about business attire and uniforms. So
yeah, so again, that is a common misconception. People think that, oh, well, I only wear this suit to business meetings. Well, that's not how the IRS sees it. Pretty much the rules are at a basic level that anything that you could wear on anything that would be seen as normal to wear outside in public is not a uniform, is not going to be deductible. That suit that I only wear to business meetings, well, in the IRS's eyes, I could wear that out anywhere in public.
Right.
That's not for my business. So it's the specific companies that have like every employee wears this same uniform with our logo
like
on it.
Construction workers.
Construction work.
Yeah, like specific things that are for the job.
Yeah, the specific clothing that's for the job, and it would be unreasonable to think that you should wear that in everyday life, in your personal life.
Right. Another big one, and I remember learning about this in school, and I think the law actually changed since I learned about it, because I think we talked about it a couple of years ago, but is business use of home, so your home office. It's actually a very complex calculation, and I think that they changed it so it was a little bit easier, but it's essentially a very hairy
it can be beneficial. It's another form that you need to file, and there are some certain specific rules about it. They didn't make tons of changes to it in the new tax law, but it is an option for business owners that don't have an office space, and that's, I think, the biggest key to being able to deduct business use of home is if you have a separate office space or a desk in quotes that's provided to you through your business, you can't deduct your business use at home. I've got a desk at work, I can't deduct my office here at home. I can't deduct that because I already have an office space that has been provided to me. But most business owners, especially are just starting out, they only are doing their work out of their home or a specific area of their home. Okay, then that should generally qualify for this. Then not going to get into all the details, but that space needs to be exclusively used for your business purpose.
You can't have anything else that's...
Pretty much, you can't, not pretty much, you can't be using that space for anything else.
That's not business. That's where you
pretty
get in
strict.
trouble. And isn't that a red flag for the IRS too? Is a big one.
The IRS does scrutinize business use of home a little more than most other things. And again, it's all of these things where the IRS doesn't get records, they don't get 1099s, they don't get tax information provided from third parties to verify this. So, all these things are going to be a little more scrutinized, especially if your numbers in the IRS compiles databases of all of this information. Really, they can see. It's so easy to see for them when someone's lying, because it'll be so much higher, or 99% of people, it's roughly in this range, and you're way outside that range. Well, there's a problem.
You don't want that.
And then last comment that I think will be important to some of you is if you rent, you can still also qualify for the business use of home, and that's probably something that not a lot of people think about. Your apartment that you're renting, if you have a specific room or your corner with your desk that you work in, that portion of your rent could be potentially applied, or you could get this deduction.
And a professional can help you kind of figure out the calculations and stuff for that. And then the last one that's a common pitfall is certain assets or purchases have to be capitalized or amortized. You can't just take a full.
You're buying lots of equipment. In the IRS's eyes, an expense with a current year deduction, you get that because you used up that in the current year. Really, the difference between a current year expense and deduction versus a purchase that needs to be capitalized and depreciated or amortized is really the length of use of that product. When you're going to use something for greater than a year, that generally speaking needs to be capitalized. That's I bought a computer I have
we did that with this.
other
Yeah.
sewing equipment.
Yeah. Sewing machines, which are
Sewing
thousands and thousands of dollars.
Yeah, so I mean that has a useful life that is greater than 1 year. I hope so, at least. So the rules are that you need to then capitalize it and depreciate it. So you're going to take a deduction for every year of the useful life of that equipment.
And those calculations are very complicated.
Yeah.
I remember learning that and having to do it by hand in school was the worst.
Yes, doing it by hand is no fun. But, you know, and then there are huge caveats to this. I mean, there have recently been even very generous changes to those capitalization rules, where actually in a lot of that, it still needs to be capitalized. So, you know, reported on the appropriate form to show that it's capitalized. But then there's certain bonus depreciation, Section 179 depreciation, that can potentially allow you to still get 100% full year, first year deduction on that. But you still need to report it in the proper way.
Yeah, which again is why having someone who knows what they're talking about is really important.
One other thing that I think is true for a lot of your viewers, your audience, and to some extent you, and you're getting to that point,
yeah,
is inventory. You know, similar to the capitalization rules, there's rules regarding inventory. And that being that, well, I buy all of this inventory and I don't sell all of it. Well, you aren't able to take a deduction for all of that, even though you bought, okay, I bought years worth of inventory and I'm just going to take that deduction now. Well, no, that's not how it works. You have to carry over that excess inventory that you haven't sold on your balance sheet, and then you realize that expense as you sell your product. So that's another thing that you need to kind of be aware of. I would say, you know, as you're just starting out, well, you're kind of probably buying up stuff as you're using it, you know, little stuff here and there. You know, the IRS doesn't make you capitalize your paper clips or add those to your inventory. Like, you know, okay, that's, yeah. So there's kind of this threshold. Okay, if you're buying tons of stuff that hasn't been sold or moved yet, yeah, you're probably going to want to be more careful about your inventory.
Yeah. And like you said, I mean, for most of you, that probably isn't the case right now, but it could be in the future.
It will become a problem for sure.
All right, so let's move on to our Q&A. I had a few question boxes that I put up on Instagram over the last few weeks and got your guys' burning questions about small businesses, and I thought that Richard could help us answer some of those, and some of them have been answered kind of in this section, so we can skip over some of those, but yeah, let's get into it. All right, so our first question is, what is the best way to track business expenses? And we talked about that at the beginning, but like our main advice, I guess, to you guys is just to stay organized. And I feel like we've said that so many times. I should count how many times we said that over this video. But
I think the real answer, though, is there is no one size fits all solution to this. It depends on your business. It depends on the amount of volume you're transacting. There's so many factors.
Yeah, use what like works best for your business, whether that's a more robust system like QuickBooks or something, or if it's just a spreadsheet. But like whatever is going to keep you organized, do that. All right, our next question is a little bit more cryptic, so we have a couple answers here. But taxes for small business, e-commerce sales ?
Yeah, so not really sure what they're getting at, but I'll focus on that kind of e-commerce sales part of the question. You know, from a federal standpoint, they don't care if you're selling in store or online. It's still income. You're going to need to report that. There's no importance to the distinction of whether it's in store or e-commerce online sale. Where though that distinction will come into play, in what that person asking might be getting at, is for state and local taxes. that e-commerce piece becomes a much bigger issue.
Yeah.
And this actually stems back. There's a very recent Supreme Court case now that has totally changed the paradigm that we've been operating on for the last multiple decades in this regard. And this is a very rapidly changing area of tax law. So definitely if you have these state and local issues, you'll want to go get some professional advice. But that being said, e-commerce sales are becoming more and more subject to various states. All these states after that Supreme Court case are changing all of their laws to basically say that once you meet a certain threshold of sales, and that's sometimes defined by volume, that's sometimes defined by a dollar figure. Once you reach that threshold, okay, well now you're going to be subject to our states or whatever states sales tax, excise taxes, whatever. There are all of these different
like we
taxes.
Talked about before, every state is different.
And every state is different. So I would say, I hesitate to say this, but there's kind of, if you're a small dollar player, you made one e-commerce sale, we're in Washington, she makes one e-commerce sale to Georgia or something. Well, I don't care about that $10 that, and Georgia doesn't care about trying to get that, what I don't even know what their sales tax would be on like a $10 sale, but they're 10 cents. No, it's not worth their time to, but so once you can kind of think of it by the thresholds, but as you start making more money in various states, you'll
have to like abide by
get
their
some
laws.
research. You want to do your due diligence to make sure that you're complying with that state's law. And again, this gets back to now, I don't know if you mentioned this anywhere else, but it's getting more and more important now to identify in your records where you are selling your product to, and what states, where are your buyers, where's your product going. That's becoming much more crucial, because then you'll need to categorize your income by state, and some you may owe tax in, others they may not meet the thresholds, but you need to have that information available so you can even know what the requirements are and if you meet them.
Right. So then the other side of this question, which is what the person may have been asking, is how to charge sales tax in other states through e-commerce sales. And honestly, like if you're on any sort of selling platform online, like if you're doing it through Squarespace, Shopify, whatever it is, they are actually calculating that for you. So you don't need to worry about doing that yourself. I do believe there is a way, at least on Squarespace, which is what I use, to change the rules behind that, but the default setting should be what you're looking for. So you shouldn't have to worry about it too much.
And I do think a lot of these service providers, because this state and local tax issue is becoming such a hot topic in the whole e-commerce sale thing, a lot of these platforms are becoming more robust in tracking this information and helping you people out to figure this out.
Yeah, for sure. All right, next question. What forms do you need to file as a sole proprietor, quarterly and end of year? And so this kind of gets into what we were talking about before, which is the quarterly estimated payments, which isn't an additional form, but that is how you can pay your tax like over time versus one big payment at the end of the year. But as a sole proprietor, you would just be scheduling filing your Schedule C.
Filing your Schedule C, the form Schedule C, with your Form 1040,
which is your
that'll
personal
all be at once, your
tax.
individual tax return. So that'll all be kind of one piece or one packet.
And that's once a year.
And that's, again, once a year.
You don't have to file anything for your quarterly payments, you just pay them online.
You can pay them online. There is actually a voucher, a paper voucher, if you want to pay by check.
Pretty much everything's online these days.
The IRS does provide is the EFTPS. It's an online payment secure system.
And that's just how you pay your individual taxes as well. Correct?
Yeah, exactly. And then I will comment though, that's at the federal level though, and for states though, there may be more frequent filing requirements. For example, in Washington, there's an annual B&O or an annual return for B&O tax purposes. But if you make over a certain threshold, then it becomes quarterly. If you make even more than that threshold, the next threshold, you have to file monthly. So there are other state requirements that may be more frequent than annual.
Yeah, so you need to understand what your city
state
and your state
and exactly
state
your
tax
city
requirements are.
And then I will also say, at the federal level, if you have employees, there may be certain other quarterly.
Yeah, and I kind of went over that, I guess,
forms.
in the first section, which you weren't here for, but we aren't going into. I'm looking at this as like you are starting a small business. Like we're not going to go into employees and all this other stuff. That gets so much more complicated. And you can read kind of my caveat in section 1 if you want to check that out. All right, next question. This is a good one. How to go about when you have a partner in any business. And in the last section, we were talking about how we were going to talk about it. In this section, under like having a partnership business entity. So if you want to talk a little bit about kind of like what your agreement should have.
So I mean, you would obviously not be a sole proprietorship then. You'd be looking at a partnership or an S corp. Again, there are some differences that you want to account for in either of those entity types. But really, when you're dealing with multiple owners, there are definitely some things that you want to do. And I see this all the time. Sometimes people go into business with their friends, their family, and like, oh, it's okay, we'll figure it out later, and this and that, we're in this together. That's a scary.
Don't do that.
That just has risk all over it, and freaks me out, to be honest. No, this is a business arrangement. Even if it is your family, your friends, like it is a business deal, and you want to cover your ass and make sure everything is protected. You want to make sure you're protected, your work is protected. So I mean what that comes down to, when there's other multiple owners involved, you want to have a pretty strong and well thought out operating agreement, LLC agreement. It depends on the type of entity, but basically it's an operating agreement that says this is how we're going to operate. These are how things get allocated. This is what happens if X happen. I mean, these are our terms of potentially selling the business, or can one owner sell their interest to someone else without a first right of refusal for the other partners? I mean, there's so many.
It gets so complex.
You literally kind of want to think about every contingency, which is again why I would say also for drafting an operating agreement or a partnership agreement, you'd want to consult with an attorney who's going to help you walk through all of these contingencies and get your thought and draft an agreement that has taken into account all of these various factors.
So just like we talked about having like an accountant and making an investment in that, if you're doing something like this where you're entering into a partnership, investing in having a legal counsel, whatever, advisor, whatever it is.
At least an attorney to draft the document.
That is incredibly important, because that can make or break your business and can lead to so much bad stuff if you don't have those requirements for the business in place.
I have
legally
seen situations where the partnership or operating agreement didn't expressly indicate something, or there wasn't even one, and that it becomes impossible to decide anything without almost going to court.
Which is expensive.
Which also, well, then you're paying attorneys, and all this gets back to, if you do the work on the front end and keep things clean, that literally will save you in the future.
Lots of headaches and heartache. Okay, so next question is individual corporation or sole proprietorship. And this goes back to our favorite phrase, it depends.
Yeah.
It completely depends on your specific situation, your unique business. And you can check out section 1. And I even added it to section 2 in the full blog post of what each entity type is and how they're different. So you can take a look at that. And I would honestly, I mean, for whoever asked this question, I would just like dive a little bit more into how they're different and what part of it works for your unique situation. Mm-hmm. All right, and the last question, I'll answer this one. In your opinion, what is the most lucrative approach to this industry for a novice, to the fashion industry? So based on that question, what it sounds like is you're looking for a quick return on your investment in the fashion industry, whether you're selling clothes or a service-based business, you know, whatever you are. And what I would say to you is, this is not the right industry if you're looking for a quick ROI. That's just not how the fashion industry works. And honestly, that's how really horrible things have happened, like fast fashion, which is a huge problem that we're dealing with now. And you're seeing the decline of places like Forever 21 because it's not a sustainable business to be expecting a really quick ROI. So I would definitely recommend like not going into the fashion industry if that's kind of what you're looking for. But if that's not what your question meant, if you're just looking for like some advice for going into the fashion industry and making sure that you are successful and you have a good business idea, my best piece of advice is to find a niche within the industry, whether that's, you know, your friends complain about the clothes they wear, or like you have a t-shirt that you absolutely love and you have never been able to find again, and you've worn it to the point where it has holes all through it. Like I think we all have a piece of clothing like that, and you can't ever find it again. Like that's a niche. Creating something like that,
filling holes.
Yeah, filling holes. If you can find some issue in the industry that people are currently experiencing, and you can fill that hole with a quality product and following an ethical business plan, you will be insanely successful. So that's my best piece of advice.
Yeah. Well, and I think what she just said is true for all business too. And you know, I have never seen there is no such thing as like an upfront lucrative business. I mean, I have seen clients that make a lot of money. Like, yes, their business has become lucrative, but it didn't happen overnight.
Yeah.
And again, they focused on opportunities, needs that needed to be met. And
I mean, that's how you find success, right? That's what a customer is looking for. Mm-hmm. But I mean, I think that's a huge misconception, especially in like this like gig economy, passive income kind of like atmosphere that we're in right now. It's like this big misconception that you can start a blog and get $4 million overnight. Like, sure, maybe that's happened to somebody. I'm not saying that it's not possible, but like never go into the norm. You shouldn't start a business thinking that's like with that thought process, because you're not going to be following like a business plan that is like built on like longevity. And you're also going to be like wildly impatient, and which won't lead you to success. Yeah. You have to be patient. Like you have to just keep working really hard, and eventually you will. It's all about consistency. Like it's just like building an Instagram, you know? Sure, there are those people who have like, you know, had like a post go viral overnight, but the majority of the people you see with hundreds of thousands of followers, millions of followers, it's because they post consistently every single day.
They've been at it for a long time.
Yeah, and they post stuff that like their customers actually want to see, and, or their audience wants to see. And so, I mean, having patience is a big one in business.
And I think for any of you, like, yeah, I mean, the biggest piece that you just said there is creating a business that lasts. I mean, I've seen business, you know, even a lot of these social media stars and stuff today. Okay, yeah, it'd be nice to make a few $1 million or millions real quick and in a couple years. But I mean, I doubt most of those people are going to be around in 5 years. You know, there's going to be a whole new way, a whole new audience.
Yeah, I mean,
and whole new
influencers weren't even a thing, you know?
I mean, the world is constantly changing. I think you want to focus on creating a business that can last. I mean, yeah, making money for a year is nice, but but making money over time and many years is even better. And I've seen that, and like, yeah, it's
making something meaningful that actually like does something good for the world is far more fulfilling than being miserable and making millions of dollars.
Yeah, I think just you want to create something to last, and like I said, it's so much nicer to be making a lot of money forever, even if it takes a little bit longer to do that, than just making a bunch of money now, but not
and then
knowing,
not later. Yeah.
You know,
it's like an investment.
Then what happens after that?
You know? Yeah. All right, guys, that's it for section 2. Thank you so much for watching. If you enjoyed this, please leave me a comment down below, like, subscribe, comment, share. Richard, thank you so much for joining us. My audience probably is going to like you more than they like me.
My pleasure.
But yeah, I'll see you guys next week for section 3, where we will be talking about some like tips and organizational structures for running your small business.